Welcome back to the Deep Dive, the place where we sift through complex financial blueprints, massive infrastructure projects, and some pretty dense regulatory labyrinths to deliver the essential knowledge you need.
And today we have a topic that's, well, it's about as fundamental as it gets.
It really is. We're undertaking a deep dive into something utterly essential to modern life, yet it's often completely invisible until, it stops working.
Water.
Exactly, water. But we aren't just talking about your local water district. We are talking about the largest publicly traded U.S. water and wastewater utility, a company that is, and this is the key point, fundamentally reshaping how essential public resources are managed.
And financed and delivered.
Right. Our focus today is the American Water Works Company, Inc., or as it's known on the stock market, AWK. And our mission for you, the learner, is to really pull back the curtain on this behemoth.
We're going to be dissecting the structure, the staggering scale, and maybe most importantly, the unique financial and regulatory strategy that lets a single company manage the water needs for, well, a population the size of many small nations.
About 14 million people across the United States. It's just an incredible number.
And, when we talk about AWK, we really have to start by stressing its financial significance. This isn't just a plumber on a massive scale.
No, not at all.
American Water Works is a major infrastructure investment component. I mean, it's listed on the New York Stock Exchange. It's firmly positioned in the S&P 500. And critically, it's one of the few very select entities that make up the Dow Jones Utility Average.
The DJUA.
The DJUA, exactly. And being in the DJUA, that signals immense financial stability and market importance. It's basically the barometer for the entire utility sector's health.
And that significance is really the crux of the issue, isn't it? Because most people, myself included, before we dug into this, you just assume water services are a local thing.
A municipal responsibility.
Right. A city or county job.
Right.
The surprise here is the sheer velocity of consolidation. We're going to show how AWK's century-old history and their, almost $50 billion in projected capital investment are fueling this dizzying pace of acquisitions.
And it's a pace that's fundamentally shifting critical public services from that diffuse local control you mentioned to a consolidated, regulated, private ownership model.
Which is a huge shift.
It is. So our deepest dive today will be into that financial and regulatory framework. We really need to understand not just that they grow aggressively, but how they essentially guarantee that growth.
How they use regulated spending to drive their bottom line.
Precisely. We're decoding the mechanism that allows a utility to target a consistent, industry-leading compounded annual growth rate.
Yeah.
It's a fascinating model.
Okay, let's unpack this. Let's start at the beginning.
Yep.
At the foundation. Whenever you see a company operating at this scale, it's rarely a startup, right? It has to have deep historic roots.
And AWK is absolutely no exception. That's right. This is a century-old utility. It was established way back in 1886.
1886.
Wow.
By James S. Kuhn and W. S. Kuhn. And it was initially named the American Water Works and Guarantee Company.
A guarantee company. That name itself says a lot.
It's so revealing for the era, isn't it? It signaled to early investors that this was not some speculative venture. This was backed by tangible, essential, secured assets.
The infrastructure.
The infrastructure itself, which guaranteed long-term revenue streams. It was as close to a sure bet as you could get in the 19th century.
So that early focus on stability and guaranteed returns is it's baked right into their DNA from the very start. It sounds like they recognized the investment potential of infrastructure long before most.
They really did. The name then evolved a bit. In 1914, it became the American Water Works and Electric Company.
Okay, so they branched out.
For a time, yes. This was during the height of the utility holding company craze in the U.S., where these massive corporations tried to capture economies of scale by bundling water, electric, and sometimes even gas services all under one huge entity.
The consolidation wave was eventually curtailed by the government, I guess.
It was, yeah. But it really solidified the blueprint for operating at a massive scale. And that experience ultimately led to their final reorganization in 1947.
Which is when they streamlined the identity to the current name, American Water Works Company, Inc.
And shifted the focus purely back to water and wastewater. And for anyone following the geography of major U.S. utility players, it's worth noting that their headquarters relocated to Camden, New Jersey back in December 2018.
Which puts them squarely in the middle of that highly active, very densely populated Northeast regulatory environment, a very strategic location.
Absolutely. Now let's move to the scale, because the numbers here, they're almost impossible to grasp without some context.
Let's try.
This company isn't defined by one region, it's defined by the breadth of its reach. We're talking about serving approximately 14 million people.
Which translates to what, about 3.4 million customer connections?
Roughly, yes. And that spans over 1,700 distinct communities. It's not a monolith. It's a collection of hundreds and hundreds of local systems.
And their core regulated operations, the systems they actually own and operate, subject to state rate review. That spans 14 different U.S. states.
Which means they are managing everything from asset maintenance and engineering standards to customer relations across a huge chunk of the country. And that requires a significant organization.
I'll say.
To run an operation of this magnitude, AWK employs a professional workforce of about 6,700 individuals. But the customer breakdown, that's where you see the real complexity of their business model.
It's not just homes.
No, it's residential, certainly, but also commercial, high-volume industrial users, various government facilities, fire service, and even wholesale services to other smaller water and wastewater utilities.
It's a very diversified portfolio. It minimizes their reliance on any single customer type.
Exactly.
Okay, here's where it gets really interesting for me. Diving beyond the simple fact of being a public utility and into the specialized operational components, how on earth do they navigate that regulatory complexity you mentioned across 14 different states?
This is their specialty. It's their biggest moat against any competition. The services are managed by local utility subsidiaries. You've probably heard of them, like New Jersey American Water or California American Water.
Right, they have state-specific names.
And those subsidiaries are regulated individually by the U.S. state commissions in the state where they operate. They have to master 14 different sets of rules.
Rules about what specifically?
Everything. Investment recovery, water quality standards, operational efficiency metrics, and maybe most crucially, the whole process for setting customer rates.
Wow, that immediately sounds like a massive administrative burden. I mean, one that a small municipal system or a competitor trying to enter the market just couldn't possibly handle.
That's it. That's the cost of entry. Their regulatory expertise is a valuable asset in and of itself. And on top of that, they're diversified. AWK also manages municipal systems under contract.
So the town still owns the system, but AWK runs it.
Exactly. The town retains ownership, but AWK brings the operational know-how. And they also supply businesses and residential communities with specialized management products, like bulk water supply or system efficiency tools.
And then there's that really fascinating side of the business that deals with the highest level of stability, the government contracts.
Yes, the Military Services Group, or AWMSG. That was established back in 2003.
Okay.
This group was set up specifically to partner with the Department of Defense through the Utilities Privatization Program, or UP. This initiative lets the DoD hand over aging-based utility systems to private operators who can provide the necessary capital investment.
And I imagine those are pretty long-term contracts.
50 years. AWK holds 50-year contracts to provide water and wastewater services at 18 military installations across the U.S.
50 years. That's the ultimate expression of infrastructure investment stability.
It really is. These contracts are extremely stable, long-tail revenue streams, often backed by guaranteed government maintenance funding, which minimizes the financial risk for the company.
Okay, now let's try to visualize the physical assets themselves. We keep talking about a $32.83 billion asset base. What does that actually look like on the ground?
Well, we can use some specific data points that really convey the physical extent of their responsibility. And I think you should think of this asset base as a constant, ongoing infrastructure crisis that AWK has positioned itself to solve.
An infrastructure crisis. That's a strong way to put it.
We'll start with the distribution network, 54,500 miles of pipes.
54,500 miles.
54,500. To put that in perspective, that's enough piping to circle the Earth more than twice at the equator. This is their underground reality, and a lot of this pipeline infrastructure is decades and decades old.
And that immediately raises the biggest problem in U.S. water management, right? Leakage and water loss. If you have that many miles of pipe, you have massive maintenance costs and unavoidable water waste.
Precisely. The older the pipe, the higher the non-revenue water, that's water that leaks out before it ever reaches the customer. Managing those pipes means continuous surveying, repair, and replacement, which is phenomenally expensive.
Okay, so that's the pipes. What about the plants?
Now, consider the treatment facilities. They operate 80 surface water treatment plants, drawing from major rivers and reservoirs, and alongside those, 520 groundwater treatment plants.
And on the back end?
190 wastewater treatment plants, which is crucial for environmental compliance and managing effluent discharge.
So they're managing the complex chemical processes of purifying water for entry, and then treating what comes out for a safe return to the environment. That involves immense scientific and regulatory oversight.
Absolutely. The logistics are just mind-boggling. They rely on 1,200 groundwater wells to pull water into the system. It's then moved by 1,800 pumping stations.
Wow.
And for resilience and meeting peak demand, they manage 1,100 treated water storage facilities. Plus, and this is critical, they are responsible for 75 dams.
75 dams. Those are massive civil engineering projects that require specialized inspection, maintenance, liability management, the works.
Yeah, full package.
I want to circle back to that aging infrastructure challenge because you said it's a crisis, and this really feels like the fundamental driver of their whole business model. When we look at those 54,500 miles of pipes, how much of that is tied to specific, expensive regulatory mandates right now?
Oh, that's a great question. The biggest mandate driving capital spending today is the federal lead and copper rule revisions.
I've heard about this.
This rule requires utilities to identify and replace all lead service lines across their entire systems. And given AWK's age and the age of the systems they acquire, they inherit a significant amount of lead piping.
And this isn't optional maintenance.
Not all. It's a non-negotiable federal requirement that costs billions of dollars to comply with.
So the implication here is crystal clear. This immense aging asset base, it's not just a liability.
It is the engine of future profit for a regulated utility. The deterioration of the infrastructure demands capital. The deployment of that capital is the mechanism through which AWK secures guaranteed returns, and that sets the entire stage for the financial discussion.
So the stated decay is what justifies the massive investment, and that investment is the blueprint for their aggressive growth targets. How do they actually fund the replacement of all those pipes and meet the lead and copper rule? That's what we need to unpack next.
That's the billion-dollar question, or in this case, the multi-billion-dollar question.
So what does this all mean for the bottom line? You know, a traditional utility is supposed to be safe and slow, a boring stock. But AWK's numbers, particularly the guidance they put out, they suggest they've cracked the code for achieving both stability and aggressive momentum.
Well, we can start with their recent performance to ground the discussion. In 2024, they reported total revenue of US $4.68 billion.
$4.68 billion. Okay.
Operating income was a very strong US $1.72 billion, which translated to a net income of US $1.05 billion. And the total assets, as we've noted, stand at a significant US $32.83 billion.
And for the shareholders, the metrics were compelling. 2024 earnings hit $5.39 per share, which was a good jump from $4.90 in 2023. And critically, they announced an 8.1% dividend growth.
Which is a very robust return for a regulated utility. You don't often see that kind of dividend growth.
Not at all.
And that momentum didn't slow down. If you look at the first half of 2025, their Q1 earnings per share was $1.05, up from $95 the year prior. By Q2 2025, net income reached $289 million, or $1.48 billion.
And the revenue growth in that second quarter was especially noteworthy. It was up to $1.28 billion from $1.15 billion. The company pointed directly to the regulated businesses division as the primary driver.
Which confirms that their core state-regulated operations and all those recent acquisitions are performing exactly as they planned.
So the model is working.
The model is working. And to fuel this planned growth and the acquisition strategy, they're actively raising capital. We saw them issue $800 million in 5.250% senior notes back in February 2025, maturing in 2035.
That long-term debt is just the cost of doing business in a capital-intensive sector like this.
It is. They use this debt to fund immediate infrastructure projects, which, and this sounds counterintuitive, is the very foundation for their guaranteed future profit.
Okay, if we connect this to the bigger picture,
Yeah.
this is where we need to stop thinking of AWK as a normal company and start understanding it as a highly sophisticated, regulated financial instrument. How do they maintain and guarantee that exceptionally aggressive long-term growth rate? That 7 to 9% target.
This is the crucial concept for you, the listener, and it explains why AWK is such a valuable stock. The 7-9% CAGR, their compounded annual growth rate, is achieved through the rate-based mechanism.
A rate base. Okay, define that for us.
A regulated utility is essentially guaranteed the opportunity to earn a profit on its investment. This investment is called the rate base. It's the cumulative, state-approved value of all the physical assets. The pipes, plants, dams, pumps, everything the utility owns and operates.
So just to be clear, if AWK spends, say, $1 billion to replace old pipes, that $1 billion gets added to their rate base.
Exactly. And once that investment is added, the State Utility Commission allows AWK to earn an allowed rate of return on that rate base.
An ROE.
Right, an ROE. And this is usually said somewhere between 8% and 10%. It's a fixed, regulated profit margin.
So the more money they spend, the bigger their rate base and the bigger their guaranteed pool of earned profit becomes.
Correct. The goal is constant capital deployment. That $46 to $48 billion capital plan they announced for the next decade isn't just a list of needed repairs.
It's a guaranteed growth roadmap.
It is. Every single dollar they spend and can prove was necessary is a dollar that gets added to the rate base, which subsequently triggers the need for a rate case.
Okay, another key term. What is a rate case, and how does that affect the consumer, the person paying the water bill?
A rate case is the formal legal and financial proceeding where the utility goes before the State Commission and proves that it has deployed capital for necessary upgrades, like replacing lead lines or fixing leaks. And therefore, they argue, they need to increase customer rates to recover that investment, plus their allowed rate of return.
I see.
AWK's genius is twofold here. First, they aggressively find systems that desperately need capital, that's the acquisitions. And second, they aggressively deploy capital in their existing systems, that's the $48 billion plan. They are constantly filing rate cases across their 14 states, which ensures their rate base grows, which thereby guarantees that 7-9% EPS EVO charge.
It's a self-sustaining financial cycle that's powered by infrastructure decay.
That's a perfect way to put it.
That makes the $48 billion figure the most salient data point of this whole discussion. It's what drives their value. But this leads directly to a crucial question from the perspective of the customer, of you, the listener. If AWK is acquiring struggling municipal systems, does that mean the consumer ends up paying twice?
How so?
Well, once through their taxes that often failed to fix the infrastructure in the first place, and now again through rate hikes that fund the $48 billion capital plan, securing AWK's guaranteed profit.
That is the central policy debate in utility privatization. From the utilities' perspective, they argue that local governments simply cannot access or manage the multi-billion-dollar bond issues required to fix these problems.
They just don't have the scale.
They don't have the scale or the expertise. When AWK takes over, they bring the scale, the regulatory know-how, and the long-term capital capacity. But yes, that capital investment must be recovered through customer rates,
Which have to be approved by the State Commission.
That's the check and balance. The Commission's job is to ensure the rate hike is just and reasonable, balancing the utility's need for a return with the consumer's ability to pay.
So it's a guaranteed profit for AWK, but one that is achieved under heavy state supervision, and in return, the consumer gets functioning, modernized infrastructure. That's the trade-off.
That is the trade-off. And their continuous forward guidance reflects their confidence in this model. Their 2025 guidance was narrowed to an EPS range of $5.70 to $5.75 per share. And they've already initiated their 2026 guidance, projecting $6.02 to $6.12 per share.
Reflecting that targeted 8% growth. They're telling the market exactly what they will deliver, and they can do that because all based on pre-planned capital deployment.
Precisely.
Okay, moving beyond the raw financials for a moment. Let's consider corporate responsibility and governance, what we often call ESG. For utility, this isn't just good optics, right? It's essential for minimizing regulatory and political risk.
Oh, absolutely. When you manage water, you manage environmental, social, and governance issues every single day. AWK's 2023 sustainability report really emphasizes their leadership in these principles. As the largest private water company, environmental stewardship, water conservation, leak reduction, adherence to quality standards, it's all paramount to maintaining their operating license.
Their social license to operate.
Yes, and their commitment seems to be recognized by external auditors and publications. They have several high-profile awards and rankings from 2023 and 2024.
Like what?
Well, Forbes ranked them #1 in the utilities industry on its America's Best Large Employers for 2024. They were recognized in the top 10% of America's most just companies. These rankings demonstrate that their focus on operational ethics and workforce management is robust.
That's important for regulators to see.
Very important. Furthermore, they received the 2023 WaterSense Excellence Award from the EPA, acknowledging their water efficiency and conservation efforts. And they were highly ranked on Barron's 100 Most Sustainable U.S. Companies list, coming in at number 18 in 2023.
These aren't just vanity metrics. They signal to state regulators that AWK is a responsible partner capable of managing critical resources.
Exactly. And their focus on the S component of ESG, the social and workforce side, is also quite strong, especially regarding military and disability inclusion.
I saw that.
They were recognized as a military-friendly employer for 2024, which probably links back to their extensive military services group contracts. And for the fifth year in a row, they were a top-scoring company on the Disability Equality Index in 2023.
Which speaks to a stable, diversified, and well-managed workforce of those 6,700 professionals we mentioned.
It does. And finally, before we transition to the M&A activity, we should note the leadership transition. Susan Hardwick retired in May 2025, with John Griffiths succeeding her as CEO.
And in a company so reliant on long-term regulatory relationships and massive capital commitments, stability at the top is crucial, especially during a period of monumental mergers.
You can't overstate the importance of a smooth transition there.
So what's so fascinating here is that while we've detailed how AWK can increase its rate base internally through all that capital deployment, they also accelerate the process externally through acquisitions.
This is the inorganic growth.
And it's how they bridge the gap to that ambitious 7 to 9% CAGR.
The strategy is simple but highly effective. Acquire systems that are currently undervalued because they require a massive capital infusion, and then apply AWK's financial model, the rate-based model, to them.
They're targeting fixer-uppers.
They are. They rely heavily on acquiring smaller, often neglected systems, municipal districts, utility authorities, or smaller family-owned companies. And the data proves the success of this mechanism.
Goes to show.
In 2024 alone, AWK added nearly 90,000 customer connections, and out of that total, 69,500 connections came specifically through acquisitions.
69,500. So acquisitions were responsible for over 3/4 of their customer growth that year.
It is the primary engine of their expansion, no question.
And this trend is accelerating at the highest levels. We have to talk about the biggest news here, the thing that is fundamentally reshaping the entire U.S. water landscape, the mega merger.
In October 2025, AWK agreed to acquire Essential Utilities in an all-stock merger. This is not the acquisition of a small-town sewer system.
No, this is a combination of two of the largest regulated utility entities in the country.
It's a monster deal. To give you a sense of scale, the combined entity is valued at $63 billion, including assumed debt. This merger represents a massive step towards consolidating a historically fragmented market.
$63 billion.
The deal, which is targeted for completion in early 2027, will see AWK shareholders owning about 69% of the combined entity. And the regulatory hurdle here is just monumental.
I can't even imagine.
It requires approval not just from the Securities and Exchange Commission, but from numerous state commissions where both companies operate. The complexity of merging two companies whose primary value lies in their state-by-state regulated rate base, it cannot be overstated. This is five-dimensional chess of regulatory approvals.
And beyond that headline-making essential merger, we need to focus on the relentless stream of smaller agreements because they demonstrate the day-to-day execution of the strategy. For instance, the July 2025 agreement to acquire Nexus Water Group.
Nexus alone represents significant growth, 87,000 customer connections across 8 states. That single agreement is nearly the size of their entire acquisition haul from all of 2024.
Wow, so the pace is picking up dramatically.
It really is. They're targeting these regional groups that offer immediate access to a new rate base and immediate opportunities for capital deployment.
Okay, let's drill down into the strategic growth state by state because this really shows the granularity. We can start with New Jersey, where their subsidiary New Jersey American Water is consistently busy.
New Jersey is a high-volume, high-density market. It's a perfect environment for AWK, and they frequently acquire municipal wastewater systems there.
Why wastewater specifically?
These systems often have significant maintenance backlogs because wastewater treatment is extremely expensive and, frankly, politically unpopular to fund locally with tax hikes.
The examples are compelling. Back in 2022, they grabbed the Bound Brook sewer system for $5 million. Then, in June 2023, the Egg Harbor City Water and Wastewater Systems for $21.8 million.
And a year later, the Salem City Systems for $18 million. They are strategically targeting both water and wastewater infrastructure all across the state.
And that consistency continues right into 2025.
It does. There's the agreement to buy the South Orange Village water system for $19.7 million, and the acquisition of the privately owned Gordon's Corner Water Coney, which serves 15,000 customers in those highly desirable suburban areas of Monmouth County.
New Jersey is clearly a blueprint for how they approach dense, capital-starved regional consolidation.
It is. Now, if New Jersey is high volume, let's look at Pennsylvania, where the Pennsylvania American Water subsidiary is focused on mega municipal wastewater acquisitions. These are the blockbuster deals.
Big money.
Pennsylvania has seen some of the highest dollar transactions. In May 2022, they acquired the City of York wastewater system for a massive $235.3 million.
$235 million.
And just recently, in October 2024, they completed the purchase of the Butler Area Sewer Authority system for $230 million.
What's so significant about these multi-hundred-million-dollar wastewater deals is that they instantly add a huge chunk of assets to the rate base, often requiring immediate high-cost upgrades that justify substantial future rate cases.
That's the playbook. And 2025 shows this relentless pursuit is ongoing. They completed the acquisition of Manwalamink Water and Sewer, and they signed agreements for the City of Pittston's wastewater collection system for $26.4 million.
And there were more.
A multi-system deal for the Indian Creek Valley Water Authority and the Sutersville-Sewickley Municipal Sewage Authority. These deals are calculated to ensure the continuous pipeline of capital deployment is always full.
Okay, moving west, California American Water presents a slightly different acquisition strategy. They seem to be focusing more on consolidating smaller, private systems that are already regulated, but just lack the scale to handle major infrastructure investment.
That's right. The California environment requires constant capital investment due to things like drought and seismic risk. AWK provides the stability, so we see a very steady pattern.
Oxbow Marina Mutual Water Company in 2017.
Fruit Ridge Vista Water Company in 2020, and East Pasadena Watercom in 2021. It's incremental, but it's consistent customer growth in a very important state.
And the 2025 activity follows that same pattern. The acquisition of the West End Martin Waterworks system for $1.6 million, a smaller, focused deal.
Followed by the acquisition of the Mesa del Sol water system and the Bass Lake Water Company system. They are systematically cleaning up the fragmented, non-municipal side of the market out there.
Then we have Illinois, where Illinois American Water has been active in both water and wastewater. What are noteworthy there is that in some of these acquisitions, like the Piazza Township Sanitary District, AWK managed to structure the deal in a way that integration actually resulted in customer bill reductions initially.
Which serves as a powerful political selling point for other municipalities that might be considering privatization.
A reduction in bills is certainly a strong counterargument to that standard privatization fear of immediate rate hikes.
It's very savvy. The major acquisition in Illinois was the 2020 deal for the City of Jerseyville's entire water and wastewater systems for $43.25 million, which shows their appetite for taking on comprehensive municipal control.
And rounding out the geography, Virginia provides a good example of a straightforward municipal acquisition. The 2024 purchase of the Town of Cape Charles drinking water and wastewater systems for $15 million.
It just reiterates that the strategy is universal across their 14 states. They seek out systems where the municipal capital funding gap is just too large for the local government to close on its own.
So to summarize this staggering pace, AWK noted in late 2024 that they had agreements in place for 22 acquisitions across 8 states, from California to West Virginia, expected to add about 43,400 customer connections.
And that volume, layered on top of a Nexus deal and the massive Essential Utilities merger, it demonstrates that consolidation is not a side project.
It is the fundamental core business strategy driving their entire financial model.
They are essentially becoming the national private solution to America's aging water infrastructure problem, and they're using the regulatory framework to guarantee a profitable return on every single dollar they spend to fix it.
It's an incredible machine.
So to synthesize what we've discussed today, the story of American Waterworks really operates along 3 interconnected dimensions, and each one justifies the company's massive financial valuation.
Okay, let's break them down.
First, there's the extreme infrastructural scale. We're talking 14 million customers serviced by 54,500 miles of pipes and 75 dams. This sheer scale is what makes the company capable of managing the inherent volatility and cost of infrastructure.
No small town could handle that.
Not a chance. Second, there's the steady financial commitment and really the decoding of that regulatory moat we talked about. AWK is committed to that 7 to 9% EPS CAGR, a remarkable target driven entirely by their ability to deploy capital.
That $48 billion capital plan.
Exactly, and then subsequently apply to state commissions for rate increases based on their expanding rate base. They're experts at turning necessary maintenance into predictable profit.
And third.
And third, the accelerating strategy of utility consolidation, which is the fuel for that rate base expansion. This consolidation spans the entire spectrum, from acquiring small, specialized systems like West San Martin Waterworks.
All the way up through large municipal acquisitions like the $230 million Butler area sewer system.
And culminating in the industry redefining $63 billion merger with Essential Utilities.
The relevance to you, the listener, is paramount here. The narrative of American Waterworks illustrates a fundamental economic shift. Critical infrastructure water is moving rapidly from diffuse local municipal control to consolidated, regulated private ownership.
And the shift is occurring because local governments, facing decades of deferred maintenance and constrained budgets, simply cannot afford the massive capital necessary to replace these systems and meet modern regulatory standards like the lead and copper rule.
AWK has positioned itself as the necessary financial vehicle to solve this crisis.
It is a brilliant, if you might say controversial, economic model built on necessity.
It really is. So here's the provocative question we want to leave with you, the learner, to consider. Given the company's staggering $46 to $48 billion capital plan over the next decade, intended to provide resilient, modern water infrastructure, how might this rapid consolidation and the resulting dependency on state-level regulation to protect consumer interests ultimately change the relationship between your community and its most essential resource?
Is large-scale private consolidation, managed under regulatory control, the only viable way to fund the modernization of America's water systems?
Something to think about. Thanks for diving deep with us. See you next time.